whatever your goal is. And then how to develop savings goals. We want to start by developing your realistic short-term goals. Is there something you're planning for 3 months out? If it is, then you need to record that and how much you want to spend within a 3-month time frame, or how much you want to save within a 3-month time frame. Next, you want to develop a realistic immediate savings goal, 3 to 12 months. And with that, you want to, these are things in this 3 to 12 months would be things like travel. Do you want to go to Alaska, or do you want to go to Hawaii? What big ticket items do you want to prepare for within a 3 to 12 month time frame? And then the last is to prepare yourself to develop a realistic long-term goal, more than 1 year. Do you need to buy a new car? Do you want to buy a home? What are your long-term goals for more than 1 year? Our next would be different savings options. Savings and checking accounts. On savings and checking accounts, you need to look at various lenders to see, does a particular lender have a specific minimum balance required for you? Is there a $500 balance, or is there a $700 or $1,000 balance? What is the minimum balance on the savings and the checking account? If it's a minimum balance that you don't see that you can't afford to maintain, then that's not a product for you. You probably would want to look at other areas to see what would best fit your budget, what would best fit your savings and spending plan. If you're going to be over those minimum balances, then that would be the checking account or the savings account for you. Just have to watch your fees and make sure that there's no fees attached. There are a few that may have fees attached to the savings and checking account. The money market account, some people may keep $10,000 in their checking account. Well, there are some money markets out there that you can earn a little bit more interest. Most checking accounts are not interest-bearing accounts, depending on the institution. So you want to keep what you're spending in your checking account, which is your spending account, and then the money market, maybe put the majority of the money you do not anticipate spending, put that in a money market account that may be easy accessible. There too, you would need to check with the financial institution you're dealing with to see if there are any penalties for taking funds out of the money market account. Certificates of deposits, those are usually a term-based CDs, whether it's 6 months, 12 months. If there is you want to check also if there's a penalty for early withdrawals. If this is funds that you think you may need, your emergency funds, then you may not want to put all of your money in a CD because there could be penalties for withdrawing those funds early. Individual retirement accounts, IRAs, 401ks, and one I did not list is stocks, bonds, and mutual funds. But on individual retirement accounts, those are to the working people. That's free money in most cases, where your employer will contribute a portion, whether it's 0.5% or whatever the total may be, to your 401k. So that is an excellent way to save funds through your IRA retirement account, 401k plan rather. And then a health savings plan is one that is not showing. That is also money that your employer contributes some portion of a health savings plan. These funds are used if you go to the doctor. You would have a card, a Visa card, debit card, where you can spend your copay. If you have to pay your doctor's funds for your doctor, then these are the health savings plan is funds you can contribute into, as well as a portion your employer contributes. And this is a good way to have those funds. They're tax deferred funds. If you're not spending if you're making a contribution to these funds, then it could be tax deferred. The SMART strategies for saving. Review your annual income regularly. You want to compare your base salary with the relevant market salary, the market. So if you think you're below the market based on the job description you're in, you may look for another job or check with your employer to see if there's ways to increase your income. You want to make sure your salary's within the market based on the duties you're performing. Analyzing your expenses. Compare spending for needs versus spending for wants. I guess stop shopping, stop going to the mall. Just don't spend on frivolous items, and try to save more. Develop a discipline to avoid excessive spending habits. Save a specific percentage of your monthly income. You want to develop a rainy day emergency fund. And in most cases, and our presenter for the mortgage may tell you 6 months to a year on the savings you need to have set aside for an emergency fund. But you do need to set aside an emergency fund if for some reason you have car problems, you have just house things that you want to do in your house, then you need to set an emergency fund set aside for expenses. And then you want to remember to pay yourself first. You do want to be able to have fun, but then you also want to be able to save. And are there any questions?
Tony, I can't see the screen, so I don't know who has their hands raised. So if you could acknowledge those, Sorority, if there are anyone, is there anyone with a question at this time for LaTanya Upton?
Yes, we have one hand raised. Miss Beverly Goins.
Mute. Hello. I am retired and I've been through all of that 401k business and everything, and I agree with Soror LaTanya that the 401k is an excellent way to save and not leave money on the table, particularly from your employer, because they will contribute a percentage to that. And for me, when the part where she talked about saving, paying yourself first, I always have, old people like to put money in envelopes and things like that. So I have a little envelope that I pay myself a little bit. So if I want to do something, well, not during this pandemic time, but if I want to go to the movies or whatever, or buy, some new shoes or things, I have that money set aside just for things that I want to do in addition to my regular savings plan. So she has very good points on all of those. Thank you for sharing that with me.
And Beverly is my sister. I asked her to join us. She's from Memphis. And she spoke of the envelope system. And if you look at, I don't know if anyone has had Dave Ramsey's effects or have any of their events, their programs, Dave Ramsey, he suggests an envelope system as well.
Donna Hardy has her hand raised, followed by Gerald Lagon.
Okay, Soror LaTanya, I have attended Dave Ramsey's workshops, and he said that, he's totally against credit cards. And but I totally disagree with him on that matter, because I mean, today most people, when you go to a hotel or somewhere, they don't want to take cash. And I always, I mean, I find myself using my credit card, like if I have an emergency or something, even though I've saved up, sometimes I just don't have it, you know? So anyway, can you speak on that?
Yes, I've attended a Dave Ramsey course as well, and he does not want you to use credit cards. But for the average person, some people have to use credit cards. And credit cards, a lot of people think that they're bad. It's just how you use them. And if you use them in a good manner and make sure you're paying your bill and paying it on time and not accruing additional fees and interest, then you're using that in a good manner. However, credit cards can actually boost your credit score. If you have consumer loans, installment loans such as mortgages or car payments, if you pay those loans off on the mortgages and your car loan, you've paid it off. If you go at least 12 months without anything reporting to the credit report and not having a revolving credit card reporting on your credit report, your credit score can drop to 0. And so I don't want to get into the credit aspect of it because we have a person who's going to cover the credit, but I did want to mention that your credit can drop to 0 if you do not have a credit card.
Okay, if we can just take one more question and then we're going to move on to presenter number 2. And who is that? Sora.
It was me. How you doing? I just have a quick question. So, Sora Upton, would you recommend, because some people have a hard time saving on their own, would you recommend maybe obtaining a financial planner to assist you with your short and long-term goals?
I don't, depending on how much money, if you're just starting out, I probably would not recommend a financial planner because you don't want to spend that money to someone else to help you save. You can go to your local financial institution and they can coach you on how to save funds as well. I don't know that I would go, spend money to have someone to go over that with me, but most financial institutions, of course, that's what we do at my employer, and I'm sure some of the others that will be on the call will do that as well. But we try to coach people along as to how to save, how to build their credit. And I've had people come back and say, you got me started on building my credit score up. And they're just repeat people, customers that come back. So we'll be glad to just my particular employer, but I'm sure others who are in the financial arena can assist you as well.
Thank you.
Thank you. Thank you, LaTanya Upton, for that great presentation. So I've looking at my screen, I see that there are 53 participants on here. And I know that all of those participants are not members of our illustrious sorority. I would just like to take this opportunity to welcome all of our guests because this is a public event who are not members, and that we thank you for joining us this evening, and we hope that you enjoy and gain some valuable information from this workshop. We're moving on to our second presenter. Our second presenter is preventing virtual bank fraud. Is that the second one, Ms. Good? Ms. Tina Jones is going to be presenting that workshop. And Ms. Jones is the coaching and performance manager for the client services for First Tennessee and the First Horizon Bank. And she's been there for 29 years. And she works in multiple positions within the organization. And Ms. Jones is going to talk to us about preventing virtual fraud and how you can take steps to safeguard your assets. Ms. Jones.
All right, thank you so much. I wanted to come to you today just to thank you for the opportunity, and I am a sorority sister as well. I forgot to mention that in my bio, so I do apologize for that. But virtual fraud is like one of the fastest growing crimes that's going on right now, aside from everything else. And so I'm just covering just a snippet of some of the things that we are currently dealing with. I'm sorry, I need to share my screen. I'm sorry.
Yeah, yeah.
You cannot start screen while others are okay. It won't allow me to share my screen. I apologize. If I can get that. Okay, thank you so much. Okay. Okay, so
You should be here now.
Yes, yes. So there are several different types, and I guess I just need to go to the next screen. The 4 common types of virtual fraud, of course, are spoofing and phishing, money transfer scams, Cash App, Zelle, Venmo, PayPal, virtual financial crimes targeting seniors, and then, of course, social media fraud schemes. These are just, like I said, a snippet of the different types of fraud that are most common when you're talking about virtual banking and virtual transactions. So we'll go ahead and start with spoofing and phishing. And as it says here, when someone, spoofing and phishing is when someone or something pretends to be someone or something that they are not in an attempt to gain or access your system, steal your data, or gain your confidence. There are several different types of spoofing. Spoofing can occur with an email, text message, phone call, and website. The target information that they're trying to obtain, of course, is online banking, usernames, passwords, account number, etc. Sorry. And the emailing, there are more than one way to hack someone with spoofing. There are many different methods and channels a hacker might use to scam their victim. Emailing, of course, is one. These types of spoofing attacks are designed to steal your information, infect your computer with malware, or simply blackmail you for your money. These emails may also use social engineering to convince the victim to freely disclose sensitive information. You also have caller ID spoofing. Scammers who are performing a caller ID spoofing attack trick your caller ID by making the call appear to be coming from somewhere it isn't. You've probably encountered telemarketers using phone numbers with area codes you recognize. They've even gotten to the point where they are able to spoof numbers that you may be familiar with. Let's say, for instance, if you call your bank and you know that number pretty much by heart, if you may end up getting a phone call that looks as though it's coming from your bank when it's really not. So they're really sophisticated in what they're doing. Another type that's more common is text messaging spoofing. And so they will text message you, and they're using so many different ways with the text messaging. It's things coming from maybe your cell phone provider, or it may be coming again from your bank in this particular example that we're using this evening, where they will text and ask you information that your banking institution would never ask you because they already have it, such as, may we get your CVV number, which is the number on the back of your credit card. We want to confirm a $300 transaction. Could you please email us or please respond with your user ID for your online banking? These are the types of things that your banking institution would never ask you because they already have it, definitely would not ask you for your social security number or account number because they've provided those things already, or they've provided your account number for you. One of the things to protect yourself against spoofing attacks, of course, is to keep an eye out for incorrect spelling and poor grammar in emails. Pay close attention to sender addresses or emails. Never click on an unfamiliar link or download an attachment. Turn on your spam filter to stop the majority of your spoofing emails. Know the steps to take if you fall victim and need to recover from a cyber attack, which hopefully you'll never have to encounter, because it can be a very long, drawn out situation that can take months and months at times. The next type that I'm going to talk about is mobile transfer scams. This is probably the most popular thing right now, especially for younger people. For instance, this is, I'm sorry. Hello? I'm sorry. This is a popular service that allows money transfer by using mobile devices or emails. This does not require an account number, which is what's so tricky about it. It's either your email or your mobile phone is used as a token or kind of like a security verification in order to move money. So it allows you to be able to literally like give someone money. And like I said, college students and everything use it very heavily right now. You don't have to write them a check. You don't have to go to the bank and deposit money to their account. You can either Cash App, which is most popular, Zelle, Venmo, PayPal, and there's some others. This is usually referred to as peer-to-peer payment transactions, or P2P. And with it, the peer-to-peer transactions, also known as person-to-person, are transactions that can be used from anything from paying rent to splitting a bill at dinner. This allows two people to transfer funds between each other using their bank accounts to credit cards through a mobile app, like some of the vendors that we see here, which is Zelle, Venmo, PayPal, Square, Cash, and Google Wallet. I think Apple even has something where you can move money around as well. Because it is so easy to send funds, it's unfortunately a simple way for scammers to collect funds too. The intended purpose of these apps is to make a payment to a friend, but that's all. It's the apps are not for purchasing and selling goods, purchases, especially to those you do not know. If you authorize a transaction, and by authorized, we mean by pressing the button, allowing the transaction to go through, you will likely not receive your money back if it's deemed as fraud. Again, the information that is used for this type of transaction, they do not use account numbers and routing numbers or debit card numbers. They transfer the money simply by using your email address or your phone number, and you just link your banking information to it, but it's never exposed, but it's still very risky. One of the tips we recommend is that you want to ensure you want to ensure your own security. So keep your apps up to date. Scammers can hack faster if the security features have not been updated. Opt in for stronger security if the apps allow it, such as a two-factor authentication or creating a PIN for purchases. Another recommendation might be if you want to be able to use it, you find it very convenient, you may want to set up a separate account that's strictly just for this type of transfer. You wouldn't want to connect it to an account that you're paying your mortgage out of, or something that has a heavier balance. But this is just another tip, to kind of protect yourself. And also, of course, you want to make sure you know who you're sending money to. The next one, of course, is really dear to my heart because I've seen so many things happen with this, is the virtual financial crimes targeting seniors. And the statistics that we have here, of course, since 2018, and of course the number has greatly increased, and especially with COVID and everything, and everybody's kind of bunkered down into their homes, they are able to access information for seniors via online and telephone phishing scams, the romance fraud, and identity theft. And so the whole thing with the senior fraud is, although crimes affect people of all ages and backgrounds, seniors and elderly are frequently the most at risk for specific types of crimes because they make attractive targets for criminals. Unlike many millennials or even baby boomers, seniors often have nest egg funds for retirement. They're less likely to actively monitor their credit. They're typically very polite and more trusting. Everyone loves a good deal, and seniors are no different. This is why seniors frequently find themselves the target of phone and email scams, peddling free gifts and prizes, low-cost medications, and other items that seem too good to be true, because they are. For many seniors, the next portion of this I want to talk about is romance fraud. For many seniors, the internet represents a less intimidating way to connect and meet people. This is also the playground of cybercriminals. These malicious actors use online platform and other methods to conduct highly targeted attacks. The FBI reports in 2018, confidence or romance fraud was the 7th most commonly reported and the 2nd most costly scam in terms of complaints received and victim loss. In this crime, an elderly victim is deceived into believing they have some type of trust-based relationship with an actor. The criminal, who may pretend to be the victim's grandchild or love interest, uses the relationship to persuade the victim to provide personal and financial information, give money or buy expensive gifts, or launder money. And then, of course, the last one that I want to talk about, I don't want to run out of time, of course, is social media fraud scheme. And I know a lot of people are using so many different types of media fraud. But if you share too much personal information on Facebook, Twitter, LinkedIn, Instagram, Snapchat, or other social media platforms, you could be putting yourself at risk for identity theft. And if you, as I said, if you share too much information, fraudsters may try to befriend you using fake profiles or by assuming real identities of people or companies that you may know. Once they have access to your social media posts, they can collect data on you, such as your name, date of birth, and even your bank name or credit card number, depending on what details you're sharing online. They can then use this information to commit fraud. For example, applying for a financial product like loans or credit cards in your name. Victims often do not realize that their identities have been stolen until they've received an unexpected bill for payment. So one of the things you could do to avoid that, of course, is to keep your identity safe on social media is check your privacy settings. I don't like to share anything that I don't need to, and I very seldom get on any social media other than just to glance what's going on, but you can always set your settings to who you would like to be able to share your see your information. Don't include personal information in your username or email address. Don't accept invitations to connect from strangers. Be careful what you post. Change your passwords regularly and verify links that you receive. And I know we could go on and on about it, but I'm just going to summarize how to avoid potential virtual fraud. Do not respond to text messages, emails, phone numbers, or phone calls when you are asked for sensitive information that your bank already has. For mobile transfers, make sure you know who you're transferring to. Once it's sent, it's usually will not come back. Check your existing account activity with all your financial institutions regularly. If you currently use online banking, set up transactions and balance threshold alerts. That way, if something unusual happens, you'll be notified. Keep your account information as private as possible. Use more secure passwords and change them from time to time. Do not allow anyone remote access to your computer for repairs or any other reason. Get a copy of your credit report, which is you're entitled to that once a year. Don't accept invitations to connect from strangers and even people you know. Sometimes they've been hacked and don't know that they've been hacked. Be careful of what you post on social media. Make sure your devices are secure. Check your privacy settings on all social medias and do not provide sensitive information. And of course, I've already said this, but don't accept invitations from strangers. Do we have any questions?
Yes. At this time, we will entertain maybe one question as we get ready for presenter number 3. Does anyone have a question for Ms. Jones? That's all great information.
Tina, would you touch base a little bit on the check scams? I see that quite often where checks are sent to an individual and they ask about, you know, you can keep $3,000 and send
Get gift cards or something.
Get gift cards and send out to individual. Could you touch a little bit on that?
I will. I will be really quick, I promise. So a lot of times those scams are generated through things like social media. I know some people will try to sell things on, they'll try to sell something on Facebook, like a sofa or something like that. And the scam is usually where an individual offers to pay you more than what you're asking, which when does that happen? That's not normal. So if you're selling a sofa for $500 and somebody says, well, I'll give you $2,000 for it, I will FedEx a check directly to you. They even tell you what to do and how to process the check as if you are a brand new banker. And they'll tell you to take the check and deposit it at the ATM, because usually a teller will ask questions about where you got it from, what is this for? And if you don't have enough money in your account to back that check up, then if it comes back, then in some cases, banks will disconnect you from being able to continue to bank with them. And unfortunately, the target for those, I don't know if Sora Upton recognizes as well, but a lot of times college students are the ones that get hit the hardest with this, because they're the ones that's most desperate for money and they're trying to do things on their own, and they find themselves getting caught up in a scam that they can't get out of. And they'll tell them to buy gift cards and you can keep the $500, and they don't think, well, why should I give you this excess amount of money and I just keep $500 or whatever the case is. So a lot of that stems from social media sites a lot of times.
Okay.
All right. Thank you so much, Ms. Jones, for that information. It's a lot of information that we need to take heed to, and so that we can protect our assets. So moving on to our third presenter, the topic is credit recovery and counseling. And here to present for us this evening is Jasmine Freeman. And Jasmine Freeman is the branch manager at SunTrust, now Truist Bank in Clinton, Tennessee. She went into banking 6 years ago after obtaining her bachelor's degree in business administration and the University of Tennessee, at the University of Tennessee in Knoxville. She continued her education at Strayer University, receiving her master's in human resources in 2018. Jasmine is one of the newest members of Delta Sigma Theta Sorority, and she's part of the Knoxville Alumnae chapter, representing the line 12 Diadems of Destiny. She's the mother of a beautiful 3-month-old baby girl named Harlan. So without further ado, please help me welcome Jasmine Freeman.
Hello, everyone. Good afternoon. Thanks for having me today. So my name is Jasmine Freeman. I am the branch manager at SunTrust, now Truist Bank in Clinton, Tennessee. And today I will be talking to you guys about credit repair. So without further ado, I'll go ahead and start my presentation. And I'm going to share my screen here. I hope you guys can see it.
Yes.
Okay. So credit repair is what we're going to talk about for the next few minutes. And I just want to start with the question, and you guys can kind of throw your answers in the chat, but why is it so important to have good credit? And I'm pretty sure there is many reasons why. It can be because you want to buy a house, or because you want to get that dream car that you always wanted. Many reasons why you should have good credit, right? So moving on to my next slide, you can see where there are, where it lists the credit scores from the worst to excellent. So as you can see, if your credit score is ranging between 5 to low 600s, then 9 times out of 10, you might not get approved for any loans, or the loans that you may want. It might be hard to get approved for loans. If your credit score is between the mid 600s to mid 700s, you could get approved for some loans. Your interest rate might be slightly higher than other loans, but that's okay. You're still in a good range to increasing your credit. And if your credit is any higher than mid 7s, then you're in a good ballpark there. So you can pretty much get approved for any loan that you would want at a pretty good interest rate. So the next slide talks about what makes up a credit score. If you look at the pie chart, you can see that 3 things stands out the most, right? So you see credit utilization, payment history, and derogatory marks. Those are the 3 big things that make up your credit score. And payment history and derogatory marks kind of go hand in hand, and we'll talk about that some more in the next few slides. And then credit utilization, which was talked about earlier. How are you using your credit? If you do have credit, are you using it wisely? And so forth like that. So that takes a big part in your credit score as well. So I threw this slide in here, starting to rebuild your credit. So when you start to rebuild your credit, you want to take care of the thing that hurts you the most, right? So that's like if you go to the emergency room because you have a bad stomach ache and you have a cut that needs stitches, you know, the first thing that the doctor is going to take care of course, is going to be that cut because it needs stitches, that needs the most attention. So you want to take care of the biggest wound first. So same with your credit. 9 times out of 10 on people's with people's credit, derogatory marks takes up is the biggest negative impact on their credit. So collections, late payments, medical bills, credit card payments, things in that nature. So when you figure this out, you think you want to rebuild your credit. So how do we start? How do you rebuild your credit? Where do I start? So you can start by making payment plans, and you can call your creditors or your lenders, and you can make a minimum payment of $25, $50. I know when I was started working in collections right out of school, they took small payments like $10 here, $15 there in collections, and they were just happy to get a payment. So even if you have to start that small, make sure you're making payment plans and pay on time. Pay on time every month consistently, because that also helps with your credit score as well. And if you can pay ahead some months, do that too, because that really helps a lot. Some creditors allow you to do settlements or consolidation. So if you don't want to pay the full amount, you can talk to your creditor about making settlements, meaning you can kind of negotiate on how much to pay the creditor and just be done with it all in all. Or you can talk to your financial institution and talk about a consolidation loan. Maybe you have so many things to pay off with so many different interest rates, And then sometimes it's best to consolidate all that into one big payment and one interest rate. And then that will kind of help you get to your credit goal as well. So these things can help you increase your credit maybe to the 500 to 600 range. And I'm just throwing a number out there depending on where you are. So I would say if your credit is within the 600, low 600 to mid 600s, and you're still trying to rebuild your credit, a good way is a secure credit card. So you can talk to your financial institution about doing a secure credit card. That's basically borrowing against your own money. So basically, when you borrow against your own money, you put your money on a card, you go out and you spend, you might go to Walmart, or you might go to wherever you go, might go shopping or whatever the case may be. And then basically you pay yourself back every 30 days. And that's how you build your credit. So that's pretty much a secure credit card. And most people think that bankruptcy, a lot of people like to do bankruptcy to kind of help restart their credit too as well. However, bankruptcy can be avoided 95% of the time because, I mean, you can do stick to a strict payment plan and a budget, and you won't have to do bankruptcy. So bankruptcy also it also hinders it don't hinder your credit too much, but it hinders what you can do. So you probably can apply for loans and so forth after you have filed bankruptcy, but your interest rate may be a little higher than others. So you want to be careful when you make that decision on filing bankruptcy to rebuild your credit. So the next slide talks about debt snowball method. And some people use this. This is a really good method. And so number one, so list out all your debts. You're going to make a list of everything that you owe or that you pay on monthly. So make a list. And then number two, you make minimum payments on everything. So if you got a credit card bill, you got your house note, you got your car note, you have maybe miscellaneous things with the kids, or maybe you want to do date night with your husband, or whatever the case may be. You can list that too. So you want to make minimum payments on everything. Pay extra on your smallest debt. So if you're paying extra, maybe $5 or $10 on something that your debt may be, I don't know, like $100. So that's really low, right? So each month you can pay a little bit extra to that small debt and so forth. So once you pay that small debt off, then that extra money can go to the next debt that you have, and so forth as it continues to snowball on. And so the next slide kind of illustrates what I was talking about. So you see where the credit card A, the payment is $25. So once that is paid off, so you have an extra $25 each month, right? So you can put that towards credit card B. And once credit card B is paid off, then you have an extra $75, or and then you can put that towards your car payment, and so forth and so forth. So that's how that snowballing works. And by focusing on smaller debts first, we create momentum that you will desperately need to keep moving towards being debt free. So I want to talk a little bit about credit bureaus. First, I wanted to talk about your FICO score. FICO, Fair Isaac Corporation, is basically what is pulled by most creditors, and it's like how you use your credit. So credit worthiness. So you may have a credit card, but are you using it? Are you using it the right way? Are you making purchases and paying it off every 30 days, or are you just leaving a balance on there lingering every month? So creditors do look at that, and some creditors pull Equifax, and that Equifax includes all of your information on credit lines and it lists all the creditors that you have and lenders and so forth. So this is normally pulled when you go to, it might be pulled when you go buy a house or when you go buy a car or maybe when you get a credit card and so forth. So I want to take the time out to see if there are any questions.
Are there any questions for Ms. Freeman? That's some great information that you've shared with us, Ms. Freeman. We appreciate that.
No problem. I'll put my information on the next slide if anybody wanted to reach out or have any questions for future references.
Okay. If there are no questions, we're going to move on to the next presenter.
Donna Hardy has her hand raised. I'm sorry. Donna Hardy has her hand
sorry, I didn't. Who has their hand raised? I'm sorry.
Donna Hardy.
Yeah.
Donna?
Yes. Okay. Jasmine,
Yes.
First question is, you know, I always feel, you know, once you get a job, you get flooded with all these credit cards.
Mm-hmm.
And how do you, I mean, you know, they offer this or that, and how do you stop the flood of all these credit cards coming to you?
How do you stop the flood of credit cards coming to you?
Well, you know, it's like once people get your address, everybody's trying to get you to get a card. And then like even the stores, you know, when you're buying something, they will say, okay, if you buy this, you'll save this. So it's like everybody's pushing for you that you have a credit card and to make all your purchases on that card. Like if I have a JCPenney card, I'm not going to use it to purchase groceries, you know, even though I know I can use it in there. Right.
So how do you stop from people sending you all types of credit cards and so forth, right? That's your question?
Yes.
So that's a great question, because I still get a lot of credit cards in the mail saying, hey, you know, you can apply here. And it's not really a one answer thing to that, because once I believe what starts that is creditors may see that, you know, you apply for one credit card, you get approved, your credit is great, and then everybody wants you to have their credit card. So there's really no real way to stop that from happening other than ignoring the mailers and not responding.
Okay, I'll just throw them away.
Yes.
It would be best if I can kind of help her answer that question, but it would be best not to just throw them away like you said, because if you go to a store and you're applying for, if they say you can save 10% to get the first off your first items, you have to be careful on how many credit cards you apply for, because that can lower your credit score.
Mm-hmm.
So you just have to be really careful with that. I just want to
also, if you don't want to, I know some people say that they want to pay off their credit card and then cancel it. Sometimes when you cancel your credit card, that can hinder your credit score as well too. So instead of paying off your card and closing it, you can pay off your card and leave it at a zero balance until you need it for a future emergency.
Okay, thank you. It was good information.
There was one question in the chat, and that question is, when should you check your credit score and should you pay for a review?
You definitely should not pay for a review. I know there are some websites out there, well, one website that you can go to get a free credit score. I think it's Credit Karma. And I know I have my credit card through my bank. And you can too if you come to Truist. But you have a free, you can check your credit score for free on your app through the bank. So there's other ways to get a free credit score check. And I feel like you should check your credit score. Your credit score updates monthly, and you don't want to just be hounding it. So I would say probably like every 3 months. That gives yourself some time to kind of get it going.
Okay, we have 2 other questions. The next question I'll go to is Beverly, and then there was another one. We got two Beverlys
Yes.
that have their hands up. So Beverly Gibson first and Beverly Goings next. And then we'll move on to our last presenter. And thank you, participants, for bearing with us. I know we're at our time limit right now, but it's such great information. We want to continue and make sure all of our presenters get the time that they have been allotted. So Ms. Gibson?
How does a settlement or a consolidation, I believe is what you called it, how does that impact a credit score? Does it impact the credit score?
Now I can personally speak on the consolidation part, and I can speak on a little bit of a settlement. The consolidation will really help with your score because I see people do it all the time at the bank, and they'll come in and say, hey, Jasmine, I have so many things to pay off. You know, I have 3 credit cards, I have, you know, this payday loan, and I just want to get rid of all of it so I can have a higher credit score. Okay, that's fine. And sometimes it's easier to consolidate that to get a lower interest rate and to get sometimes a lower payment than what you were paying collectively with those, with the other creditors, and pay off those things faster. And then that will reflect faster on your credit score. And in addition to that, it's going to reflect that you have paid off, like say if you do a home equity line of credit to consolidate, once you get that lump sum of money and you pay off 5 creditors at one time, that's 5 things gone from your credit score already. And so now you just have this lump sum of payment. And so with the settlement, same thing, it just pays it off faster so it can reflect on your credit score, your credit faster, and it will reflect positively, showing that you have paid it off.
Okay. Ms. Goins?
Yes, just a comment on receiving all of those credit card applications in the mail. You know, you have to be careful, make sure you shred those, because that's another way of people can get some of those and open accounts in your name and you're not knowing it. So that's a way to prevent fraud and deception there, to shred those and not just throw them away.
Yes.
Okay. Thank you. Thank you so much, Ms. Freeman. We appreciate your information.
No problem.
Thank you. Our next presenter, and speaking on the topic of steps to becoming a homeowner, is Sorority Nakisha Thompson. And Nakisha is the daughter of Richard and Blenza Davis. She was born and raised in East Knoxville. She is a Fulton High School graduate and obtained her Bachelor of Science degree in mechanical engineering from Tennessee Tech. She has been in real estate for 17 years, and she is the owner and broker of Realty Executives, Nakisha Thompson Realty LLC. Please join me in welcoming Sorority Nakisha Thompson.
Good afternoon. How's everyone doing?
Good.
I'm gonna share my screen. I hope I do better than trying to log on today. Let's see. Here I go. Are we coming up? Can you guys see it?
Yes, sir.
Okay. Okay, I think I can make it bigger here. Okay, here we go. So what I'm going to do is talk about, this is for first-time home buyers, but it's the same process. As I go through this, I'm going to spend a little time on the market, because I'm sure you guys have read and you've heard that this is the craziest market that I've been in since I've been doing real estate. As of today, we have 420 houses on the market. Just to give you what the average is, usually is around 25 to 2,700 houses in Knox County. So it is supply and demand. It is definitely a seller's market. From last year to this year, sales prices are up 20 to 25% in 1 year. That is historically very high. To be a buyer right now, I'm going to spend a lot of time on the mortgage process and getting you ready and things that you need to know, because that's very important, because you are really in multiple offers the majority of the time. So you have to understand what money you're putting down, how much you qualify, how much you can get, how much you may need, and that process. So the first thing is, you know, buying a home is a big step, and choosing the home and the financial program that's right for you. And all financial programs are not the same. So when you go to an agent, if she sends you to the first one that she's done business with, that doesn't mean that that's a good program for you. Take some time and go to banks, because there are loans for low to moderate income. If you make a certain amount, 59,000, I think it, or under, then you can qualify for no PMI. We'll go over that. You don't have to have money down. In some areas, some banks actually pay for 7,500 in the majority minority, and that's in the 37914. You can help on closing costs, so money you don't have to bring. There are some programs that have grants that will help you get qualified. So one thing I tell my buyers is, don't just go to the first lending person that your agent sends you to. You go and look and give them all your information. So selecting a home in the loan program is very important. It's a wise investment. I will tell you what thrills my heart is 5-10 years ago, first-time home buyers who bought their first home, I'm reselling those homes, and they're walking away with $40,000 and $50,000. They had to have somewhere to live. You have to pay rent, and that was an investment that they can actually invest in something or put in their bank account. You can build equity, interest paid on the home also. It can typically be tax deductible. So remember, when you get your tax return and you're paying that interest, that you also can write it off of your taxes. First thing you need to do before you start looking is apply for the mortgage. And the reason I say do that is we all open the books, we all go to Facebook, we all go to realtor.com, and we look at the house we want. But you don't know, one, if you can afford the house. Two, you may not want to actually pay what you qualify for. One thing that the mortgage lender does is they only look at what you have credit on. So for instance, if you have kids that are going to private school, they're not including that private school tuition. If you like to buy shoes or clothes, they're not including that. So I always ask people is, you know, how do you want to live? Do you want to get in a house where you're pretty much spending 45% of your income, or do you want to have some extra money so you can do the things that you want to do? So there's going to be a maximum amount that you qualify for, and then there's going to be a mortgage amount that you qualify for. Also, it's important to keep in mind, if you put money down, then you don't have PMI, and we'll get into that. Make sure you have an experienced real estate agent. Right now in this market, how you write that contract up is very important. We have a couple of things going on. We have multiple offers. There are items in that contract that, if you know the contract and you've done it for 18 years, you know how to write it. That would be very enticing to the seller. However, there's sometimes a way you can alter it in the negotiation period. There's ways that you can get ahead of the game. I had one actually client that it was coming soon and you're not supposed to see it. We put in an offer before it ever hit the market, sight unseen, because we wanted the house and we knew that day one that it was going to be gone and we were going to be in multiple offers, and we ended up getting it. So it's very important to have a knowledgeable real estate agent, especially in this market, because it's so tough for buyers. And also a loan officer. do your homework, ask for references, make sure they know what you're doing. The last thing we want to do is get to the end of your loan and find out that the loan officer calculated something wrong. Some of the basics for getting ready is, of course, we went over your credit history. Cash for down payment and closing costs. Before this year, the seller could pay, and they still can for closing costs. I have not had a contract this year that the seller has paid for closing costs in the last probably 8 or 9 months. Down payment. If you have down payment money, you can go over costs. Most of the contracts in the last 6 months have been over the asking price because supply and demand. The supply is down and the demand is up. And your income and your existing debt and financial obligations, I like to start people 3 to 6 months before they're ready so we can get some of those debts down so you don't walk into a new house and have a bunch of debts also. Because I'm only successful if you stay in your house and you like your house 5 years later, because it will become a payment and the new house becomes a average home that you're living in. Also, when you're looking to look for your house, you have a wish list. And also think about how you live. You know, if I live in this area and I have to drive 45 minutes in traffic, do I want to spend an hour and a half away from my home to get a cheaper house? Or do I want to live closer? And you got to think of gas prices. You've got to think of my mortgage is going to stay the same, but I'm going to have to drive. So sometimes it may seem like it's less expensive, but it's really not on the other end. Credit score, I'm not going to go over that because we just went over how important the credit score is. But I always, when I first start, I get on Credit Karma. I have it on my phone and all my kids have it on their phone. And literally every day you can go and see where your credit score is. And it also tells you if it's going up and down, and it doesn't pull your credit, so it doesn't pull it down. So all of my clients, I tell them to get on Credit Karma so we can watch their credit score. Why is my credit so important? I'm not going to go over that because we went over there. Closing costs. So when you actually get ready to purchase a house, you also have to pay the bank. So a lot of people just think, okay, the house is $200,000. That's how much I want. The bank gets paid for the work that they do. So you have closing costs, and usually it's between 3 and 7%. As I said before, you can ask the seller to pay. Right now, sellers do not have to pay. So you need to have money saved up in order to pay your own closing costs right now. The prepaids is what's collected. It's part of the house's taxes and insurance, and that's also paid. Some loan programs allow you to finance your closing costs and some do not. It's very important to, like I said before, to get the loan that works for you. How they do it is they do debt to ratio income. So if you have a lot of debt, you're going to qualify for less. Another item is if you're in the county, you don't have city taxes. On an average, you can qualify for about $10,000 more in the county than in the city because you don't have both of those taxes in there, just as an average. Your monthly payment is what they'll tell you, and that's principal, interest, taxes, and insurance. That's all in one. It's paid at the same time, but that's what's actually included in your housing payment. Also, PMI. So that's why it's important what type of loan you get. If you don't put down at least 20% in a conventional, you would have to pay PMI, which is mortgage insurance. And that you just pay to the bank. If you foreclose, then they can collect on the money. So there are some loans, which is USDA and other loan opportunities that you do not have to pay PMI. FHA, you have to pay it the full term of the loan. So make sure you get all the information on your loan package. Different type of loans, again, you got government loans, and that's FHA type loans, VA loans. If you're a veteran, you can get a VA loan. Conventional loans, and it used to be, conventional loans you usually want to put down about 20%. The reason you would get a conventional loan and not an FHA loan is conventional loans sometimes do not have PMI, and usually all of them are fixed. I'm going to go, so because I want to kind of get through all this so I can talk about the market a little bit. When you're also doing your mortgage, ask your lender about buying down points. You can pay a little extra and get your interest rate lowered. A lot of times they'll give you what you qualify, but you could bring about 1% and that will lower your interest rate. Give yourself the advantage, apply for the loan early in the process. And that reason, you know how much you qualify. And another thing that I do is we do $10,000 of increments. Right now, based on a loan that I do, you pay about $61 extra every $10,000. So when we are negotiating, because it happens like that. Right now with the market, we go, back we used to go and we would go for a second showing and then we would talk about it. Now I'm leaving the place and saying, I got this written up. We have multiple offers. Let's talk about price. What's the highest you want to put it in for? So it's very important for you to understand your mortgage and what you're comfortable with before you start house hunting. These are some items that the bank's going to ask you for is your pay stubs. Bank accounts, let's talk about bank accounts. So they're going to ask you the last 2 months. If you do a lot of cash apping, every single deposit that goes into your account, they're going to want to know what it is. They're going to want a written statement. So I always tell my clients, the 2 months, bring your bank statement, stop cash apping. Don't don't deposit any money right now because they're going to want that. It just makes it a cleaner process. It can be you let somebody borrow $20 and they put it in there. They will ask you what that is. If you sold something on Facebook Market and someone gave you money for it and you put it in there, they're going to ask you what that is. So be you want a clean bank statements for 2 months. Any errors on the credit report, when you pull them, Home Source and the Urban League, they will help you for free. If you need to go in and talk to them, they'll help you resolve some errors that may be on there, and they'll help you write letters and verification of any debt. If you find something on there, go get help, and there are people who can actually write and help. Once you've accepted that offer, you can formally begin your loan process. And then this kind of goes through the 4 steps through closing as far as processing, decision making, the pre-closing, and the closing. At closing, you will be assigned attorney that's a title company, and that title company does the title work. 100%, they're going to ask you, do you want title insurance or don't? Probably 10, 15 years ago, I would have said you really don't need it. It's in the city, it's in a subdivision. At this point, because I'm a foreclosure agent also, I've seen titles that are not correct. I've seen people close on somebody else's property. 100%, I would say always get title insurance. It is for the life of the loan. So they're going to ask you that, and it's your option. It's a whole lot cheaper to get it when you're closing than if you try to go back and get it. And it stays for the life of your property. There will be an appraiser that will come out and make sure if you're getting a loan, that your house is actually, it appraises and it's worth the amount that your loan is for. Now, I will say right now, people are paying over the appraisal amount. That's how crazy the market is. So I had someone call me and she's like, I'm getting rid of my agent because she told me this and this and that and the other. I was like, well, wait a minute. Don't get rid of your agent. I know you're coming to me and I'm not trying to lose you. However, that is what the market, but let me explain to you what's going on in the market. So what I do now that I haven't done before this year is before we go out and look, I sit down with my client and say, everything that I've done the past 16, 17 years, throw it out the window. This market is different. I'm going to ask you to pay what the price is or more. I'm going to tell you not to ask for closing costs because you're not going to get it. I'm going to tell you to get an inspection, but we may not ask for repairs. It depends on the house. If you want this house, depending on if the house just hit, the price range, and where it's located. It usually takes a buyer 4 to 5 times of losing the house that they wanted before they get it, because it just is nothing that we have ever done in real estate. But right now, that's where the market is. I had a client that I sold his house. You know, he bought the house from me in October for $245, and that's what it appraised for him. He lost his job, and 3 months later, he sold it for $290 with multiple offers, and it appraised. So that's how crazy the market is right now. You know, build your buying team. Don't just pick a friend that's a real estate agent. Don't just pick a friend that does the mortgage. Pick someone that you can trust. Pick references. See how long they've been in the business. Make sure that they work for you. Their job is to work for you. Right now, ask any questions. If you're not comfortable, then back up. It's the biggest investment that you're going to make. Now, I want to take 2 minutes and just talk about items that are in if you're buying, items that are in the contracts now that people are doing. One thing they're doing, they're called escalation clauses. So when you have multiple, and I've never heard of them to this year, if you have multiple offers and your agent asks you to put in an escalation clause, and I've written a couple and I've won. What it says is, I will pay your highest amount that's in plus 5,000 increments to a certain amount. So you have a max, okay? So what that means is if you have a $200,000 and the highest price is $210,000, you're saying you're going to pay $215,000. So that just gives you, no matter what the highest price is, it used to be the highest price, but that gives you a little leverage to actually put in the contract, and you know you're going to beat the person that is in there. That's what's winning contracts right now. So does anybody have any questions? I know that was a lot. I got to go through it really fast for time.
Nikki, I do have 3 questions that have popped up. Joni Dantzler, can you ask your question? Chantel and Ronnie Wagner. We'll take those 3 questions in that order. Joni?
Okay, so my question, when you were talking about the market, and I think you said it's a seller's market, I was asking how often does the market change? And I actually think me and Chantel have kind of the same question going on here.
Well, it depends. You know, we had the recession back in 2008, but that was due to, that was basically due to the banking industry. So we had a lot of inventory. So the market corrects itself. We are way past due. When I say way past due, we're about usually every 10 years. I think we're on about 15 or 16 years where it hasn't switched over. However, a couple of things are happening with the virus and with people being able to work from home. We are considered one of the top 3 places to move in the nation. So, because we don't have state income tax. So what that does is people from California are selling and coming and buying here. So our prices seem so low, and they're making California prices. I mean, they're making California money, but they're buying Knoxville prices. So they're able to pay over the price. and I've been looking at this for the last 3 years. I've been saying this is the height of the market, the height of the market. The problem is that we have our supply is so low. It will take us so many years, at least 2 years, to even build up our supply. And we have more people moving here. So I would say at least the next year, it's probably going to be here, and maybe even 2 years is what the economists are saying. We may see a slight dip because we do have a moratorium, so there's no foreclosures. So people are living in their homes and not having to pay their mortgage, and you can't put them out. So those houses will come on the market. However, because our supply is so low, they're probably just going to come in at market value because people are buying houses 20 and 30% higher. So I think we're probably going to be in there. Now, if you can sell, that's great. I mean, I would say sell all day long, but the problem is going to be finding you a house. You sell high, you're going to buy high right now. Yes. Did I answer your question? So it changes every 10 years or so, and we're past that.
Yeah. You did. I'm nervous.
Why are you nervous?
Because I'm going to be a buyer soon. Oh, man.
just get prepared, because on the other hand, the interest rates are low. So your buying power is even more. So even though it seems like you're buying high, your interest rate is kind of giving you a little bit more room. And I don't think we're going to see any major dips anytime soon. I did when the virus came in, and we had the best year that we ever had.
Okay, Nikki, I think Chantel said her question was answered. So Ronnie Wagner has a question, and then we will close with that question.
You're on mute.
Can you hear me now?
Yes.
Okay, so since we're operating in a kind of crazy market, I was wondering if the normal 6% realtor fee is negotiable.
Everything is negotiable.
Okay. How negotiable?
I mean, everything is negotiable. They set an amount, so realistically, you can negotiate whatever you want it to be, and either they say yes or no. So everything is negotiable. The standard is 6%. Mostly what I see on there is 6%, but really everything is negotiable. That's not a have to. That's not a standard, but that is negotiable. It's as negotiable as you sign on the dotted line. I mean, and I would look and see what that realtor is going to do. You know, if you're just going and putting it on the market, or are you staging it? Pictures mean, I have a professional photographer. I don't take my own pictures. They will come in and take pictures. It's coming soon is all I do right now. And the reason I do a coming soon is I get everybody excited for about a week because they know it's coming, but you can't look at it. And then also what I do is I take 5 days after that and say, I'm not taking any offers. We're not looking at them to this day. So then you have all these agents giving me all these offers, and then I'll say, well, we got a best and highest. So then I move the price up. But of course, I'm representing the seller. I love that. If I'm representing the buyer, I hate it. But you know, there are some ways you can do it to make sure that it's done correctly. A couple of, I put one in today. It was a young agent. She should have left it on the market. I had mine in immediately, called her. I got it from my buyer today. I wouldn't have taken my offer, even though it was a strong offer, because she probably could have got about $5,000 or $10,000 more if she would have left it. But I knew I was the only one in there. So I said I needed it in about 2 hours. It was a cash buyer. So, but really this market, you can move it out. And you know, you can move it out and you'll get more money because it's the market.
Okay, Nikki, just 2 questions in the chat, very quick answers so we can wrap this up. One question is, how trustworthy are these postcards that come around saying, we want to buy your house?
everybody wants to buy your house. So this is what they do. We do what's called farming. We go and we put a, if I say I want to do your subdivision, I send it to my marketing company. I say I want to buy your house. So then I get in on a listing and I say, yeah, I can buy your house for this amount, which will be a low amount, or I can put it on the market and I can get this amount. So if they have an investor, they may want to buy your house, but an investor is going to buy it low. They're buying people's numbers and they'll call you. If you are in East Knoxville especially, put your house on the market. Investors are calling people and giving them cash, and they can get more money right now. The ball field is coming, that it's moving in that direction. So you always put it on the market, because you got 2,000 agents. We've got about 4,000 buyers. We move the price up. So they're doing that in order to get business.
Okay, last question. Are there bidding wars with purchases straight from the builders as well? I know they have waiting lists.
So builders, all builders are not the same. So they all have a process. So for instance, this week, I'm on a list. I'm on every list pretty much. But D.R. Horton, what they do is you sign up for their list when they are, they're going to have 5 different lots. They'll pull your name. The agents will call you and say, is your client still interested? You may be, depending on what list you are in, then you go in a line order, and then they go from the first to the second to the third. So my client has been on the list for 8 weeks. Her name came up. She was number 3 on one lot. She was number 6 on another, and she was number 10 on another one. So they're doing it like that. Another builder is putting it out there, and this is the price. And you have 2 days to get it in, and they'll take the highest price. Now, the key is there's a little place in the contract that says appraisal. Even if you overbid it, this is a way you kind of get around it. Even if you overbid, I have marked appraisal. So I have a little wiggle room in there that I can say, well, the house didn't appraise. I know this is the amount. So that's why it's important to have an agent that understands. So what I'll say is, okay, so this is the deal. This is what happened. This is our thought process. We can bid up to $400,000. If it only appraised, we said we were only going to pay appraised value. However, I will tell you, these houses are appraising almost at that high amount right now because everything is going so high. You're on mute, Kathy. Okay.
I got it. Sorry. Thank you for that information. That's a lot of great information. If anyone's in the market for selling or buying a home, now is the time. Participants, I don't know about you, but I've learned a lot this evening from all of our knowledgeable presenters. LaTanya, Jasmine, Nikki, and Tina, thank you so much for sharing your expertise with us this evening. Each of you did a fantastic job on the topics that each of you are very knowledgeable of. To all of our participants, on behalf of the Economic and Development Committee, we thank you for joining us this evening, and we hope that it was worth your time. And at this time, I'm going to ask for closing remarks from our president of the Knoxville Alumnae Chapter, Delta Sigma Theta Sorority, Talicia Mims. So our president.
I cannot thank you all enough for the program we had today. Not only to the presenters, not only to all of our guests and our soras that participated. You were actively engaged in asking questions. So thank you for that. But I also want to thank the Economic Development, their chairs, their committee for pulling this together. It was phenomenal. It was phenomenal. I mean, I learned some things today. I'm like, what? And I'm sitting here thinking, I wish my kids were on here because they'll be first-time home buyers and they need to know all of this stuff. And I love how it all worked together. Right? They were different topics, but they all worked together and they all built up on each other. So thank you all so much. I hope you all enjoyed it. And I hope that you also come back and participate in the rest of our May Week activities because they're all just as awesome and phenomenal as the one we had tonight.
God bless and enjoy the rest of your evening.
Thank you. As our president said, so much for joining us. We're glad you were here, and don't forget to look at the calendar for our additional May week activities. To our chairpersons, Doris Toney, and co-chairs, Doris Toney and LaTanya Upton, thank you for leading us in this charge. It was very great, a great opportunity to share with our community. Good evening, everyone, and have a blessed day.